So with no further ado, I'd like to introduce you to our speakers today. These are Lisa Whitehead, who is the Director, Credit and Collections for Crowley Maritime, and Keith Cowart, who's the Senior Product Manager, Receivables Corporate Liquidity at FIS. And with that, ladies and gentlemen, I would like to hand you over to Keith and Lisa and wish you all the best for a fantastic webinar. Thanks, guys.
Very wonderful. Thanks, Brian. I just want to double check everybody. Brian, can everybody see my screen now?
They can indeed.
Okay.
Perfect. Well, good afternoon, everybody. Good evening or good morning, wherever you're joining from today. I didn't type in the box, but I'm actually in just outside of Atlanta, Georgia myself, which was where one of the first people that Brian mentioned was from. Just wanted to say a sincere thank you for joining us for this webinar. Again, it's around solving cash flow with AI. And as stated before, if you have any questions, you can go ahead and type them into the question and answer box, and we'll get to those at the end. And if there's any questions we don't get to because we run out of time, we'll make sure that we follow up with you individually as well. So with that, we'll take a quick look at the agenda. So we'll give more of a proper introduction of who I am and who Lisa is. And then we'll start talking about some of the challenges faced by corporations. This is something that FIS takes a big interest in every year. We do a market survey, and I'll get into some of that in just a little bit. We also have just being able to leverage artificial intelligence in credit to cash. So typically when I talk about this topic, I usually combine the practical application side or kind of the day-to-day life of artificial intelligence with the cash flow side, the impact that it has. Today I'm going to try and do it a little bit different. I'm going to split those two apart. So we'll look at the practical application side first, and then we'll look at the impacts that it has on cash flow. And then Lisa has been very gracious to join me today to give you some of her experience at Crowley Maritime of how they're solving cash flow. And Lisa is always a wealth of knowledge, so I'm really appreciative of having her on board. And then again, we'll wrap up with Q&A at the end. So by way of introductions, as I said, my name is Keith Cowart. I am a senior product manager for the receivables business with FIS. Before joining FIS, though, I was a practitioner in the field running credit and collection organizations in a shared service environment, and actually a former customer of FIS's Get Paid product. Excuse me. And before that, I formerly ran accounts payable organizations, other finance and accounting leadership roles as well. You may ask yourself, what does accounts payable have to do with this? We're talking about accounts receivable, credit collections. But really, it's my experience in running the AP department of understanding why invoices don't get paid, what kind of internal struggles do companies face in paying invoices that really help to drive improvements on the AR side. And the AR and AP, where they meet, is really what we're talking about in terms of cash flow. So it's certainly something that's helped me in my career, and hopefully I can impart some of that knowledge onto you. And Lisa, you want to take a moment to introduce yourself?
Of course. So my name is Lisa Whitehead, and I'm the Director of Credit and Collections for Crowley Maritime. I've been in credit and collections my whole entire life. So I started out, in retail credit when I was like 16. So I've worked with FIS, and since they took over Get Paid, I used Get Paid when SunGard owned it. So I remember the black and white screens way back in the day. So I've been a user of Get Paid for a very long time. But I started at Crowley in 2013. I'm located in Jacksonville, Florida. So they hired me because of my user experience with Get Paid, and to implement and strategize so they could have an extensive credit and collection platform, and get rid of some of the manual processes and optimize their cash flow and working capital through making sure the cash flow gets in faster. So so this is the first time I've actually been behind the scenes on Get Paid and doing configuration and really knowing what the system does. So I think what's enhanced my career at Crowley and made us very successful is actually understanding all the technology that the tools come with, actually using them and implementing them into your processes. And so we'll talk about some of that later on today.
Excellent. Thank you, Lisa. Good. So real quick, for those of you that don't know who FIS is, we are actually one of the world's largest fintech providers to financial institutions as well as corporations, all the way from small business up through enterprise size corporations. And actually with the acquisition of WorldPay, we also became the world's largest, or the largest global merchant acquirer as well. And really the entire ecosystem of the financial systems and solutions that FIS provides supports over 20,000 clients for things like receivables, payables, treasury, insurance, and much more. And the Get Paid solution itself is a major part of the success of FIS's capital markets and business-to-business division, with considerable investment that's driving the future of receivables. So as I said in the agenda, we'll start with looking at a few statistics. Everybody likes statistics, right? So every year, FIS does a market study to understand what's happening, what are the trends in the industry, what are the focus areas that companies have, what are the pain points, and what are the areas that we can help them solve, those issues that they're facing. So with that, we'll jump into a few of the different statistics around it. I promise we won't spend too much time on it, but it just kind of sets the stage of what companies are looking at today, what challenges they're facing, and then it'll lead right into our discussion later on. So first, we always ask, what are the top challenges that credit and collection or accounts receivable organizations are facing? And the most common ones, the top three that you can see here on your screen, is 50% said that collections are, in the collections process, that they're facing increasing DSO, or days sales outstanding, and past due AR, or accounts receivable. And I'm saying the actual words for these because I got feedback before that sometimes, because I've been in the industry for so long, I take for granted the fact that not everybody uses acronyms the same way. So yes, DSO stands for Day Sales Outstanding, and AR stands for Accounts Receivable, and how we're using them today. And then another 49% say with collections management, one of their toughest challenges is around prioritization of accounts, of focusing on the right customers at the right time. And then another 49% say that they don't have visibility into the risk associated with their portfolio. So in that credit review process of understanding how much risk there is in doing business with certain customers. These challenges are all kind of tied together, and they actually compound each other by the fact that if you don't have visibility into the risk in your portfolio, you're likely going to do business with more risky customers. And then if you're doing business with more risky customers, it becomes more and more difficult to prioritize the accounts because everyone becomes a high priority. And then of course, if everyone's a high priority, you're not able to get through all of your accounts, then that's what's driving the increase in DSO and past due AR. So we're going to look at how artificial intelligence can help solve all these challenges that companies are facing. So diving a little bit deeper, and I promise this is my last slide of statistics from our survey, we asked, what areas are you investing in over the next 12 months to help you with those challenges? So 95% said process automation, followed by 92% for API connections. And for those that don't know what APIs are, it's the layman's term is that it's a real-time connection between systems of transfer of data. And then 87% said AI and machine learning. And granted that this webinar today is focusing on artificial intelligence, and it's the number 3 priority that's listed here. But really, I would argue that AI and machine learning really provides the biggest opportunity for cash flow improvement because it leverages both API connections and process automation to help with these improvements. So I would position this as, if you're looking at the investments that you're making to improve your cash flow, why choose one? Why not choose all of them? So again, we're going to talk about that. So if we look at artificial intelligence across all of credit to cash. And so we're going to dive into kind of the practical application. So what does that mean in the day-to-day life of someone who's using a solution to support their credit to cash process? So we'll look at it in kind of a chronological order, somewhat of a chronological order. So we'll start with credit, because that's usually one of the first pieces that's involved in terms of protecting the company from risk. So a lot of people refer to, and when I say a lot of people, it's usually sales teams refer to credit as a sale killer or revenue blockers, or I'm sure there's many other names that you've heard that sales teams have said about the credit organization, because they are trying to protect the company from risk. So they may have to say no to a certain deal. With artificial intelligence, however, that can lead you to become more of a sales enablement operation. So we actually have a client who just recently won an award from the sales team at their company that had the tag on it that they were a part of the sales promotion department, because they've been able to protect the company from risk while also looking at the opportunity for increasing sales to those lower risk customers. So how does AI help in the credit process? Well, the first piece is related to pulling credit data from external credit bureaus. So being able to automatically pull that information, put it into a scorecard to provide that review or the risk assessment, as well as looking at the internal payment history you may have with a customer already. So that's actually providing a very accurate view, and actually more of a predictive view of the risk with the customer is using your own internal payment history with them. And it's going beyond just payment history, it's looking at order history and other information as well to determine that risk. And again, so it's looking at that internal information you have. It can be married up with the external information you may be pulling so that it can determine the risk with each of the customers. And then it can also alert you to anything that's changing in the risk status for those customers. So they may be a low risk customer, but there's some event that's happened, or there's a trend of events of where maybe they're slowing down payments, and it's a potential risk factor that's growing into the business that you're doing with them. So it can alert you to those changes in the risk. And then it can also provide the automated approvals around credit lines. So based on whatever your risk tolerance is, with each individual company, it can help with providing a balance of the workload in terms of reviewing all of those credit lines. That goes to the initial assessment of credit risk with customers, as well as the ongoing assessment, even for customers that you've been doing business with for a long time. So it can automate the approval process. If they meet certain criteria, it's under a certain value, those can be automatically approved and set certain limits, as well as being able to route those for approval for the things that go outside of those thresholds. So now if we switch gears a little bit and look at the collection side of things. So how does AI apply in collections? So there's really three main focus areas that we'll look at today. There's many different pieces of it, but we'll focus on these three areas. One is identification. So it's looking at multiple data points. And when I say multiple, that's really not the magnitude of it. It's looking at a lot of information to be able to determine a customer's propensity to pay. So that's very different from your credit risk, which is the customer's ability to pay. This is looking at the customer's willingness to pay. So that's two different risk profiles. So you have your credit and your collections risk. And the second one that we'll look at is prioritization. So it's organizing the accounts to make sure that you're contacting the higher risk accounts more often with more of the personal touch. And so it's prioritizing the accounts and allowing automation to help with the lower risk accounts. And again, we'll get into more detail about how this actually works in just a second. And then three is coverage. So if I could see everybody, if I were to ask the question, raise your hand if your teams are able to contact everyone in their portfolio each month. Not many of you would be raising your hand. So with artificial intelligence and being able to identify the risk and separate the accounts out into different risk classifications, the system can help you with automatically contacting the self-curing accounts or the low-risk accounts while focusing your teams on the high-risk accounts. And what that does is driving more business towards the lower risk accounts, more automation, and it allows your teams to actually get through their entire portfolio, usually more than once in a month. So I'm going to take you through a little exercise. If any of you have seen me present this before, no spoiler alerts. So I'm going to give you a sequence of numbers. So you see these 4 numbers on the screen right now. With these 4 numbers, can you predict what the 12th number will be after this sequence? Not likely, right? So if I give you the next number, do you think you could predict it? Not likely. So if I give you all the way up to the 11th number, can you predict what the next number is going to be in the sequence? Again, not likely. For those of you that just have to know, that number is 1027. And what this is showing is that artificial intelligence looks at a lot of different information. It's pulling in, in the collections world, it's pulling in the invoice information, the payment information, any of the credit risk side of it as well. And it's looking at trends in the information. It's developing this probability of what's coming next and predicting into the future. So in this example, we're looking at numbers, but you could think of it as payment history that you may have with a customer to where the AI engine is predicting that next number. So that's where it really applies, and that information is used to help prioritize the accounts to make sure that you're collecting from the right people at the right time. So again, it's looking at all of this information, so it can go beyond that 12th number in this example. It can continue to predict out for many, many numbers into the future. And in the collections world, it can predict out into, say, 6 months into the future of what potential delinquency may appear with a customer so that you can proactively prevent it. So give you a little more of a classic example of how it prioritizes accounts. Again, this is a simplified example, but if we have 2 customers, customer A and customer B, we take a look at customer A, they owe $50,000 and they're greater than 30 days past due. Customer B owes $30,000, but they're less than 10 days past due. So just on the surface, looking at these, of course, in a perfect world, you want your collectors to collect from both of them to make sure that they don't go any further past due. But in terms of a prioritization standpoint, on the surface, it looks like you should probably go after customer A. But with artificial intelligence and looking at the different risk factors associated with the customers, it's determined that customer A is actually a low risk, while customer B is a higher risk. So what does that mean in terms of the risk associated with these balances and with these customers? The probability of bad, and bad is an acronym for beyond acceptable delinquency, which is something that is different for every company. One company may say 1 day past due is beyond acceptable, that we need to make sure that everything comes in at a certain, on the due date. And then other companies see that, providing a grace period of 10, 15 days past the invoice date is something they're comfortable with. So whatever that threshold is for you, the probability of bad for customer A is 2%, while the probability of bad for customer B is 50%. So a simple calculation tells you the cash at risk for customer A is $1,000, while the cash at risk for customer B is $15,000. Now, again, this is a very simplistic example, and with artificial intelligence, it's looking at a lot of different factors to determine the actual risk associated with a customer. But this just demonstrates how, when you just look at the balance and the age of an invoice, you may be leaning towards those customers that are actually a lower risk, the ones that will pay as well, but you're leaving off those customers, or at least delaying the contact with customers that are the higher risk. And so really what we're trying to do here is change that mentality of looking at the risk associated with these customers to make sure you're focusing on those higher risk customers first, which allows you to automate and the contact with some of the lower risk customers, and allows you to get through your entire portfolio. So this is an example of that prioritization and really how it helps from coverage. So This is just using 5 different classifications of accounts. It can be any number of classifications of how you want to split out the accounts. But if you look at the level of automation associated with self-curing accounts, that's the highest level of automation. Those are the accounts that are going to pay regardless of whether you contact them or not. So you still want to provide reminders of invoices coming due, just to make sure that there wasn't an invoice missed somewhere or anything else that would prevent payment. But you really don't have to have that personal touch with those self-curing accounts. And the low risk accounts are pretty much in the same category there of you can use automation to contact those customers, and you may require some personal contact if there's an issue as to why they're not able to pay. As you move up into the medium risk accounts, that's where you start using a little bit less automation associated with it. So it's looking at providing those initial contacts using automation to the customers, and then a little bit more personal contact as they start to get closer to their due date to, again, make sure you're preventing them from becoming delinquent. And then as you move into the high risk accounts, that's where you can still use automation to do those first contacts out to the customers, again, making sure they have invoice copies and so on. But that's really where you want to put most of your resources towards focusing with the high personal contact of making sure they're on phone calls with them, they're holding meetings with them if there's any issues with invoices and so on. And then the final category here is the extreme risk accounts. This is where you want your collectors to have that continuous personal contact. You want to make sure that they know what's going on at all times with these customers. Typically, you don't want many customers in this category. However, there may be some strategic customers that you need to do business with that may be considered extreme risk. So you really want your collectors to stay on top of those. So the white line on this graph actually represents the kind of a bell curve, sort of, associated with the number of accounts that typically we see falling into these different categories for companies. And that's where you've got your self-curing accounts. The number of those and your low risk accounts are typically the largest category. So it's a lot of automation, of a lot of work that you can take off of your collectors by automating that contact. And then as you get further on, you can see the number of accounts tend to drop. And that's associated with the fact that you have visibility into the credit risk of those companies, because you're leveraging AI to take a look at the risk profile of those companies. So you're doing less and less business with them and opening up sales into those lower risk accounts. So from dispute and deduction standpoint, AI can help in a number of different ways. One being just identifying the deductions. So automatically identifying those deductions or disputes from short payments or even emails from customers. So being able to read and interpret the information that customers are sending in emails through natural language processing. The AI engine can pull out that information and use that to go ahead and automatically create and identify the dispute. And then it flows into the smarter workflow. So being able to route those disputes and deductions to the appropriate people for resolution. So for an example, you may have a pricing dispute, and that goes to the sales team to resolve whatever that pricing issue is. The system can automatically identify that it's a pricing dispute, and they can route that to the appropriate person, so it reduces the resolution cycle time associated with these disputes and deductions. And it also provides visibility to the cash at risk. So in the example we showed on the slide a couple of slides ago, it showed visibility into what's the actual cash at risk. It's not the full value of an invoice. It's some piece of it associated with the risk of that customer. So that allows you to provide a more accurate cash forecast, which treasury teams are very excited about, being able to have an accurate cash forecast so that they can do better working capital calculations. And it also supports bad debt reserve calculations also, because I know in my past, a lot of the bad debt reserves were calculated based on just people's assumptions. They're just thinking, well, we may or may not get these invoices collected. So being able to use the risk associated with these customers and having accurate invoice level predictions of when those payments are coming in allows you to make sure that you're appropriately reserved for bad debt. And then looking at it from a cash application standpoint, So this is one that's near and dear to my heart, that when in the past, you've had a lot of payments coming in through check payments, and typically the remittance data associated with check payments, goes along with the payment itself. It goes through a lockbox. So the bank is able to provide a file that has all of the remittance information associated with that payment, so that that file could be loaded into an ERP system, which typically would get you probably 40 to 50% straight through processing on check payments. However, with the push for companies to move to electronic payment methods, because we all want money faster, it's actually created more manual work for companies from a cash application standpoint, because the remittance details are typically sent separate from the payment itself. Usually they're emailed or sent to a server somewhere, and then the cash applier has to find that remittance email, then they have to match it up to the incoming payment, and then they have to match that to the open invoices. So it's a lot of manual work in there. With artificial intelligence, however, we can automatically retrieve the remittance information from an email box or a server location. We can scan that to digitize all the information, so it all becomes usable in the matching process by the AI engine. So this helps to speed up the application process, regardless of what the payment method is, and it helps drive the straight-through processing to 90% or greater, because it goes across all payment methods and uses more information from a matching standpoint than a typical ERP system would. Usually ERPs can match on invoice numbers, dollar amounts, maybe a date, and that's typically it. With using artificial intelligence, you can match on any number of data points, like reference numbers, PO numbers, whatever the case may be, to speed up that processing. It also supports automatic write-offs of deductions or short payments, and this saves you time and money by automatically writing off amounts that are under your defined thresholds. So if you have a deduction of $1 on a payment, it's not worth the time and effort of having someone spend hours trying to research it and figure out what the issue is, where the system can automatically write those off, again, whatever your defined thresholds are. And then really a big piece of it here with the cash application side is that the artificial intelligence engine, it's built on machine learning, so it learns from exceptions. So it's monitoring what a user does. In the case where a payment couldn't be applied automatically, it's monitoring what that user does to clear the exception. So it's looking at the information they're using, how they applied it, so the next time a payment comes in from that customer, it can be processed straight through automatically with no one having to touch it. And then just another kind of side piece, because I mentioned before about the investment areas for companies of process automation, APIs, and AI. And this is really how all of this can work together. So with APIs, you have that real time transfer of data. So whenever anything changes or updates in a system, so does the solution that's supporting your credit to cash process. And then it provides you with better visibility to information. So you're making decisions with all the information in real time instead of waiting for something to update, so that you're making the right decision. And then there's the ability to collaborate between different systems. So you have, say, your sales team may be on a different CRM system. They typically don't want to have another system to log into to work disputes. So with APIs, you can transfer that data back and forth between the systems, so they're actually working in the CRM system to resolve the dispute, and then that information is transferred back to the collections team in real time as the changes are made. So again, it allows all these teams to collaborate together. All right, so now we'll look at the impact of artificial intelligence on cash flow. So we looked at the practical application side. What does that look like on an everyday life of a credit and collections organization? Now let's focus on what that actually means from a cash flow standpoint. So if we look at just the reduction of risk in your portfolio, so really focusing on that credit side. So you're able to identify any unnecessary risk you may have with companies you're already doing business with today. And so that helps you to reduce the number and value of those delinquent accounts that you have. And again, as I mentioned before, it helps you to increase revenue opportunities. So you can identify those lower risk customers especially the ones that may have underutilized credit lines, so that you can help drive sales to those customers so that they can grow revenue with those customers instead of focusing on those higher risk customers that they may be looking at today. And then when you do have those strategic high risk customers, it really helps you to set up proper payment protection plans so that you're mitigating the risk associated with those accounts. And so that helps you to focus on driving cash flow through your credit side. So from an AR aging compression standpoint, so being able to leverage AI in the collections process, it helps you to automatically prioritize the accounts, again, so that you can get through your entire portfolio and you can make sure that your collectors are spending their time focusing on those higher risk accounts, the ones that require more of that higher personal touch, and then automating the contact with those lower risk accounts. And then of course, if the risk profile changes on a customer, the system will automatically reprioritize the accounts and they will move the customer between the strategies so that you're making sure that you're using the appropriate strategy on those accounts. And then that's where it also helps that you're providing a consistent strategy with accounts that are in different classifications. So for all of your lower risk accounts, all of your collectors are following that same strategy for all those customers. And that's really what helps you to train the customers to have proper payment practices, and it helps to prevent delinquency. And then just the accurate invoice level predictions. So being able to see when payments are expected to come in on each individual invoice, which in the past it was potential to have that prediction at the customer level, but then it really didn't give you the visibility at the individual invoice of knowing that this invoice is likely to go more delinquent because of whatever information we have on the customer. So being able to provide that information helps you with better cash flow forecasting and helps you to prioritize the accounts to make sure, again, that you're collecting on the right people at the right time. And then again, from a total portfolio coverage standpoint, it's automating those self-curing and lower risk accounts so that your collectors aren't spending as much time on those. And then the ability for artificial intelligence to use that natural language processing, so the incoming emails from customers, it can read and interpret what those customers are asking for or stating in their emails. And then it can provide suggested actions. And to give you an example, if they're looking for invoice copies, that's something that takes a lot of time from a collector because they have to read the email, they have to understand which invoices they're looking for, they have to go find those invoices and then email them back to a customer. The AI engine can interpret that they're asking for this list of invoices so that it can automatically provide those invoice copies back to the customer. So again, it saves time. As well as if they're indicating a dispute, it can go ahead and create the dispute and code it and route it to the appropriate person for resolution. And then also it's like payment promises. So if they're promising to pay something next week, it can automatically set that up as a promise to pay. And so it's looking for the payment to come in. If it doesn't come in, that becomes a broken promise, and that puts it as a higher priority for the collector. Again, it's being able to automate all this work so that the collectors can just focus their time on contacting customers. And then it's looking at the continuous monitoring of customer risk and the automatic reassignment of accounts. So it's looking at a customer over time. So something that we all fall into the trap of, we've got so much work going on. We look at a customer once to assess the risk, and then we probably don't look at them again until we know they're asking for a higher credit line or they've become severely delinquent. So with artificial intelligence, it's continuously looking at the risk of these customers so that it can reassign them, good or bad, into a higher risk category or a lower risk category based on what's changing in the profile of the customer. So again, it's saving time and allowing your collectors to cover the entire portfolio. And then lastly, I want to touch on just the side of processing cost or operational expense. Now, while this isn't really a direct impact on cash flow itself, it certainly has an impact on your bottom line. So it's looking at the operational expense side by being able to create capacity so that you require fewer resources to get through your entire portfolio, to train your customers to make sure they're paying routinely and on time, and it grows. It has scalability, so it grows with your business. So you could be a small business today utilizing the system and training your customers to make sure they're paying on time. But then as your business grows, this system can grow with you, and artificial intelligence helped to set that up. And even if you're already an enterprise-sized company, a very large company, that maybe you're looking at acquisitions, so you're bringing on another business, the system can use all the data from the other company that you may be acquiring, can scale with it to make sure that you're being as efficient as possible. And it certainly provides just a lower total cost of ownership. That again, it's fewer resources and supporting you from a system side of automating as much of the process as possible. And then it also offers the customer self-service options. So it helps to remove some of that administrative work for your collectors, where you can allow a customer to go into a portal to retrieve invoice copies, to create a dispute on an invoice, or even make payment directly on the invoice as well. And that even goes so far as when a collector is sending out an email, or the system is automatically sending an email to a customer, it can provide a click-to-pay link. So that it makes it as easy as possible on a customer to actually pay their invoices. They simply click on the link, it takes them to the portal to make payment. So again, it's removing a lot of the administrative work and making things much easier for companies. So we looked before at the corporate challenges. You can see them here again on your screen. So by leveraging artificial intelligence, it really helps to turn these challenges into answers. So all of these things that they mentioned before as challenges are now solved, and it really helps to solve cash flow. But don't just take my word for it. I want to have Lisa talk to you a little bit to tell you her experience and what her company's been able to do. And Lisa, do you want to take it away?
Let me take myself off of mute. As I said, my name is Lisa Whitehead, and I'm with Crowley Maritime Corporation. Crowley recruited me in April of 2013 for my Get Paid experience, you know, on the user side, and it's been very successful. So we're going to go through some slides today to kind of show you where this company went from a very manual paper process. Right from the green bar. I don't know if anybody, how many of you ever came from the old school where they had green bar paper and you do your aging on it and you'd handwrite your little notes, and that's pretty much where Crowley was. So they really had no automation. They had, you know, spreadsheets in Excel with some notes written on it. Their credit process was basically an application came in and a folder roamed around an office, you know, for an approval. So we're going to talk about, you know, kind of where Crowley is today because of the automation that Keith's been talking about, and some of our upgrades that we've done to improve our processes as well. Next. Are you turning that, Keith, or do I turn that?
I've got it for you.
Okay. I'm not going to stay on these slides too long. Crowley always has a cultural moment. So whenever we have any kind of webinars or anything that we're talking about our company, we always have kind of either a safety moment or a culture moment where we have some development skills. And so one of the things that I recognized really early on with Crowley is to say, okay, what does credit contribute to sales? And what does sales contribute to credit, and how can we help each other? So these are just some things that are best practices that you can look at that you may be able to incorporate in your credit and collection process with sales and have a more collaborated relationship. At Crowley, we really take a different approach with our customers, and we want our collection and our credit and collection experience to be a happy one. So just as much as you have customer experience in terms of customer service, you also have, you know, your credit and collection customer experience. So you don't want to go through, you know, sales, getting this customer and going through all this work, you know, and then in the end lose that customer because they had a bad credit and collection experience. Next. And this is the same thing. It's the sales department contributes to credit and have a pro credit attitude. You know, I think typical with sales, they think everybody should get credit. And I always try to elaborate on that and say, you know, everybody's not going to get credit. We have to look at the customer's credit worthiness. Can they pay us? And one thing that we've used several times is I tell them, I'm like, you know, if a realtor comes and sells Lisa $1 million house, And I'm like, yay, I'm going to buy it. But I work at Crowley, so I don't make enough money to buy $1 million house. So has that realtor lost a sale? No. So had he sold me the house, I wouldn't have been able to pay for it. So we really try to do an approach with sales and credit to try to give realistic opportunities and making sure they understand that it's not just about the sale, but it's the ability to be able to collect the money to ensure our customer has the credit worthiness to be able to pay that, because you're doing a customer a huge dissatisfaction if you don't do your due diligence up front. I'm not going to go into our mission statement because it's pretty self-explanatory, but I always share it because it's just a powerful message in a credit and collection group. Crowley, of course, didn't have credit and collection processes, so we had to make credit and collection policies. I wanted our group to have a mission statement. We've really taken pride to have like one Crowley, one credit and collections department, and to where we all collaboratively work together. And we've been able to do that with having that artificial intelligence, that automation, the communication between sales and credit. We'll talk about this a little on this next slide, but there's lots of things that we're doing at Crowley to ensure that that automation continues. COVID has been a huge challenge for, I think, any company. We're going to talk about some things that Crowley did during COVID with using our artificial intelligence that really helped us, and we were kind of surprised. I think you'll be surprised by our results as well and how well we did during the COVID. And we're still, going through it. But when you see the numbers, you'll be surprised, because I'm gonna give you some numbers at the end. One thing that I also want to talk about, we talked about the positive customer collection experience, the communication skills, making sure that everybody's training. Get Paid has done several trainings for my group, and it's really been a very good training. It helps you utilize the system efficiently. Sometimes when you're training a group of people, sometimes they're half listening. When you have somebody actually come in and talk about, the automation and what they can do to make your job easier as a collector, that's when, the light bulb goes off. So they also do training as well, and we've done the certification programs. So I myself am a super user through their certification program. All the managers that I have are super users, and then the collectors we put through the collection certification, and then on the credit side we had all the analysts go through that certification. That really gives them detailed, more information, things they may have known, maybe not. Maybe they can improve, maybe things that we needed to change in the system. I thought the certification program was very good. I gave it very good ratings, Keith, because I feel like I know everything. And so when I went, I was like, oh, I'm just going to breeze through this and know everything. But I mean, they actually taught me things that I didn't know. So we learned a lot. We learned some best practices and Get Paid that we didn't know, and things that have really helped us get to that next level as well. And we still continue soaring, being successful. And I mean, even my management team's like, we don't know how you do it, Lisa, but you do it. And and I do it because I have this automation and Get Paid. So that there's times where I feel like I need to carry a presentation with me for our own people, because sometimes, credit and collections, we are in that little back corner, we don't get, the recognition maybe sometimes that we deserve trying to collect in the back. So there's sometimes people don't see what you are doing with less people, the cost savings, the efficiencies that you have, the metrics, and the cash flow. And so this is where we've had to do several presentations in-house as well, so we can communicate to our team and say, look what we've done, and make sure that you communicate what credit collections has done to sales. Because if you don't speak up, they just think customers pay all by themselves. They think you send an invoice and the customer's going to pay it. And we all know that doesn't happen, but there's always that misconception that the AR collects itself, and it doesn't. Okay, next. So our Crowley credit limit approval process. Keith talked a little bit about the credit scores, the automation. That's huge. Crowley with their manual processes, were running manual D&Bs. They were having paper credit applications. We now have a process through Get Paid, through their automation, where we have an automated credit application. The customer goes online, fills out the credit application. They're actually filling out the customer information in Get Paid. So I don't really have to do anything. When I get the credit application, I push a button, I can send a reference, if I want a reference. The D&B is already imported, so we get Dun & Bradstreet imported into our system every week. And so we always have scorecards. So every customer, regardless of whether they have credit or not, has a scorecard. So that way, if we need to do a preliminary review on a customer, we have it already on hand. So if the customer has ever been a customer with Crowley, whether they're a consignee or a shipper, because we're in transportation and logistics, every customer has a score, which puts them into a credit risk class. And that carries it through the collection process as well. One thing that we like about the automated credit applications is our customers don't like filling out PDFs. They like going online and filling it out and then getting an approval back, because we're doing same day approvals. So if it's U.S. domestic, where it's U.S., Puerto Rico, or our Virgin Islands, we can process that credit application within 5 minutes of getting it. We have all the information we need. And customers like that. They get their approval process back. They didn't like filling out PDFs and no telling where that PDF went or where the credit application went. And it also helped us with customers not changing our terms and conditions. So when you're going online with the credit application through Get Paid, they can't change our terms and conditions. They can only fill out, the boxes that they're allowed to fill out. So we were having problems with people Xing out things on our credit application, and that was a huge problem. And it got us in some legal issues if somebody didn't notice somebody crossed something out, or they changed the terms on the terms, because, it's written real small. So it also incorporates financials. We also use our matrix, if it's an existing customer, has a lot of Crowley sales. So we put our sales, how long they've been a customer with Crowley, and then we also put, how they pay Crowley. So 40% of our matrix is based on our own internal experience. And then we also use Dun & Bradstreet information for the U.S. domestic customers. Foreign, we use strictly our own information that we have. We'll occasionally run a D&B, but it's very limited on international customers. We do have a platform in locations in Central America. So we do a lot of international trade and export-import in Central America. We also handle a lot of the islands, so the DR, El Salvador, Honduras, all of Central America, plus all the islands that we're dealing with is international. So we handle those a little bit different, because it's international trade. But we also use agents as well that collect on behalf of Crowley that are also, they have a portfolio and Get Paid. So we allow our agents, as customers come in, we assign those to our agents, and that way they're able to go in to Get Paid and see the agents and what they need to collect in the countries that we don't have an office. One thing that's also important about this piece of it on your credit risk management piece is, like Keith said, it does recognize and give you scores, and you can actually do your reviews based on that. So we have one of our reviews we do with outside collections. So if the customer is already on credit hold and they're 100% past due, what's the collector doing with it? So we're able to put in specific rules to ensure that we're going to end up getting the information that we need on the end for a review. So we also use the advanced search method too. The advanced search basically lets you take all the data and Get Paid, and you can really run some robust reports. We've used it to automate a dashboard, for the company, and it's all automated. So at any point in time, anybody can go on and look and see how much does the company have in AR, how much is past due, how many customers do we have. There's all kinds of things that we have pulled from Get Paid on an automated process to make sure that we have that visibility to operations, sales. Our ERP is Oracle. And one of the things that Crowley was challenged with was we have many different point of sale systems that we didn't have one place to keep all the customers. And so what we did, Get Paid, we were able to take all of we have 5 different, in this particular instance, that we're working on. We have 5 different instances of different systems that are pushing information into Get Paid, and we're able to look at the customer on a global perspective in terms of how much they owe us across the business. So you don't have, we can track credit limits. So you're going to see a number later that I'm really proud of in terms of, how do you keep up with a customer's credit limit? None of our point of sale systems actually put a customer on credit hold unless you do it manually in that system. So we had to find ways where we could manage 5 or 6 different systems in one place and manage that credit line, because you can't have a credit line of $10,000 in 5 different systems, or you'd have a $50,000 exposure. So now we have a $10,000 limit. We have all these systems fitting in there. We can address those and immediately go and find out what we need to do. Do we need to increase the credit limit? Do we need to put them on credit hold? Are they past due? So those are all things that this artificial intelligence and this automation do, where the collector comes in and they know exactly what they need to do. The credit people come in, they have credit applications, they know what they need to do. They have the credit reviews, they know what to do. A lot of the stuff is automated. All of our dunning letters, the past due notices, all of those are automated. So we don't have to send out any of those. Go to the next slide, Keith, and I'll talk about some more stuff that we're going to go through. So we're going to talk about the collection steps about, prior to credit hold, because we're in, logistics and transportation. So we deal with bill of lading. So it's like, what do we have to do? So part of our strategic plan in our collection in Get Paid is, if we finally get to a point where the customer is not responding to us, the customer is not paying us, then we have a strategy that says, go to the salesperson. And you go to the salesperson, hey, can you help me out? So there's never a time where nobody's informed. So you have documentation of that, because everything's going in and out of the system and it's documented. And we'll talk about that in just a minute, because I have the email exchange that we'll talk about, which is really where Crowley saw the turnaround. We upgraded in 2018 to 8.7, and that's when we got the online credit application, we got the email exchange, and we saw huge efficiencies with the email exchange. Before, we were cutting and pasting emails into the system. Now all of our emails go in and out of the system. So the collector sends the email right from the customer's account. We have already pre-formed templates. They can modify them if they want, or they can add stuff if they want, and they send it to the customer. When the customer responds, it comes back into the customer notes. So you're building a process around a collections process versus trying to build it around a person. What happens if that person goes away? Are you going to lose that email? Are you going to have to get an email and try to paste those in? So that proved a lot of efficiencies for us, and that's one of where we saw, because we were so freed up from not doing the manual processes, and the EWS was a huge thing that you email out of the system, it comes back in the system, and you don't ever lose any of your notes. And that's very important on a legal point, because any of you that have dealt with an attorney and taken an account to an attorney, they want all your communication to that customer. And so we've had legal cases that we have won because of our documentation and all of our efficiencies and having all of our approvals and everything in one place. It's been during COVID. One of the reasons why they asked me to talk today is I was talking to one of the girls that Get Paid, and I was telling her how successful we were during COVID. Do you want to go to the next slide, Keith? Mm-hmm. And so we work together with sales. And so these are just some things that we did. But what I want to share with you from the COVID experience was, in March, we were probably 50%, maybe almost 60% past due, a number that I had never seen in my lifetime in collections. And when you work so hard, Crowley was named 2019 Best in Class Collections because of our automation and efficiencies and the results that we have that you'll see later on the next slide. We were very proud of that award. So here we go thinking, we're best in collections, and then all of a sudden COVID hits and our numbers soar, and we're like, what do we do? Well, we immediately implemented and we developed and implemented an action plan through Get Paid, and we put in strategies, stricter guidelines. We on the scorecards, we tightened up the scorecards you know, to look at things that were more high risk, like notifying us of bankruptcies, notifying us if a customer's, you know, past due more than what they normally would be. So we had a huge, very regimented credit hold process that we implemented with Get Paid. And if a customer owed us any kind of money, we put them on a credit hold. And basically, until we communicated them and determined, you know, what customers were out of business permanently, what customers couldn't pay because they were not operable, you know, what customers were essential customers. You know, Crowley was an essential customer. So we were able to code those customers and be able to provide metrics on a daily basis to our senior management right out of Get Paid. We were telling them a cash projection in terms of the promises to pay and how much money, you know, was coming in that day and what was forecasted. We were able to give them all the customers that weren't paying us, because we were able to code them and Get Paid as like, we have a dispute management process as well. So we were able to code that as a COVID. And so anybody that had like a COVID, we had like little codes. So this is how many accounts are out of business. These are accounts that are bankrupt. These are accounts that are not operable right now. And we had a strategy. So I'm very pleased to tell you that by the end of the year, in December, our numbers for collections in terms of our delinquency percentage were right at what we were in 2019 when we won Best in Class Collections. So we went from all the way almost to 60 down to 30 by December. Our bad debt has been very little, because I think that credit risk up front is very important in making sure that you have a proactive approach about your credit risk, opposed to just billing everything and putting it on the books and hoping that collector's going to collect it. It's like, why don't you know for a fact your collector's going to collect it? I mean, since we've been on Get Paid, we've had very little bad debt. The bankruptcies that we have, we've been named as critical vendor in most cases and collected our money. We have had a few hits, but we've been very successful. And part of the success has been very good for my career. I came in here as just a manager of credit for Crowley and to kind of set up the credit process. And 2 years they promoted me and gave me all of collections. And recently I got promoted to where they're giving me the whole entire company and all the business units at Crowley. And so it's been a very successful career for me, and I would say that I have that because of Get Paid. There's no way I can deal with thousands and thousands of hundreds of thousands of transactions and customers, and be able to collect that without having and holding that credit and collection group accountable. So I know at all point in times what my analysts in credit, I know how many approvals they're doing. I know how many reviews they need. I know how many calls my collectors are making. I know how long they're on the calls. I know their numbers on a regular basis. So Get Paid has really provided the metrics that we've needed to hold our people accountable. And that's very important, specifically during COVID, when you have people working from home. You need to make sure that you're holding them accountable and that they're doing their work. And we were able to do that on an analyst position and all of our collectors working from home. So that was another thing that's very successful, is our business continuity plan. We had it all laid out. So when our collectors went home, we had no issues because they have everything they need and Get Paid. So hopefully I didn't miss anything. Did I miss anything,
Yep.
Keith?
No, I think
Because I'm going to go into the numbers now.
Yeah, I can't add anything to that. I mean, I think
Okay.
that's fantastic. It speaks for itself.
So now you're going to find out why we won Best in Class in Collections. I went to London and it was so much fun. It was the first time I went to London. So in January, I went to London and rode a bus and rode a train and rode a subway. And so, you know, our DSO, since we implemented Get Paid, is down 15 days. Our overall past due went down 25%. And this is what, I mean, they had no control. Remember when I tell you that, oh, a customer has credit and they just have credit, right? So they had a 47% where customers were over their credit limit. And of course, audit, Deloitte was like, that's way too high. So one of my KPIs was, you need to get the credit limits in line with what they truly are. So we would have a $10,000 credit limit. The customer owed us $500,000. Well, and get paid, you're not going to be able to do that, because as soon as, even if it is coming from different POS systems, it's going to alert the collector that this is a $10,000 limit and somebody just dropped 100,000, and then we're on the phone immediately calling them and either collecting the money because they should have paid it up front. But I mean, we've been very robust in our collection processes through this automation, and I definitely wouldn't be as successful as I am without having get paid. And you know, I'm kind of a get paid baby because I grew up with them. You know, so I'm not really talking bias, but you know, this is really the first company that I've been able to, you know, from the beginning to end and see how successful it was. And it's the first company that I've worked for that's privately owned. And so it's really rewarding to see these kind of numbers and have the automation. And by the way, we have this automation with, you know, I had to kind of work around because, you know, every company has its own technology issues. Through Get Paid, they have solutions for everything. So if there is everything that I ever needed, I put in a ticket and I ask for it, and they find a way to do it. So I've had technology obstacles within my own company that Get Paid has helped me solve within the system. So that's where, you know, Crowley looks at me and they're like, we don't know how you do it. I do it because I have a good relationship with Get Paid. You know, I've seen the results that this company has provided us through these metrics and automation. And I'm, like I said, I'm just very proud. Crowley has been very successful for me, and if I can help anybody, or if you have any questions, you're more than welcome to call me. I do it all the time for Get Paid, and I don't work for Get Paid. I work for Crowley, but I have to give credit where credit is due. And like I said, they've made my career very successful across the board. You know, I've been in credit and collections for 30 years. So, and I would say probably out of that 30, I've been on Get Paid since 1997. Does that sound about right, Keith?
I think so.
So I was with Siemens. Siemens was on Get Paid, HD Supply. There's some other companies too that had on Get Paid. I think I've done at least 4 or 5 implementations on Get Paid, but this was the first company where it was, you know, credit, you know, it was the beginning to the end, and seeing those results and getting an award. I've worked for publicly traded companies all my life and I've never gotten an award. So it was a big deal. I felt like I was getting an Oscar in credit and collections. You know, and I've been very recognized by Crowley and with all these achievements and with the team. I will say that training is very important. Utilizing the system to its fullest efficiencies. One of the things that I talk about the most when I do have the user groups when I talk to, or if somebody calls me for a reference or something, is to ensure that they're utilizing all the efficiencies. Because if you don't, you're not going to get those kind of results. So I'm one of those people where if I see something and I'm not using it, I'm on the phone with Get Paid. What does this do? What is it? You know, I want this. And they've been able to help me achieve that. And we're getting ready this year to go to their latest version. So we're excited about that. It's going to give us some automation that we don't have today, and we're excited about it. They're constantly asking us what they can do to help us through those user groups. So if you do have Get Paid and you want something that you don't have, or you have a question about something that you want to do better in your system, you know, speak up, because I found that the company and Keith and his staff have been just very good about communicating with us and helping us to optimize, you know. But if you stay silent and oh, well, the system doesn't work, that's because you're not asking. The system does work, and it's proven years after year with Crowley. If I sat there and pulled up a graph for you, every single year, my delinquency percentages have always been less, and that includes 2020. So it was high, and then it went back down, you know, after we got everything. But our controls and putting that in place and reacting very quickly and implementing that and Get Paid really helped us through COVID. And I think that was one of the things that when I talked to Get Paid and they found out how well we did during the COVID, because they're like, everybody's having a really hard time. I said, we did it first, but we quickly implemented a process, put it in place, and we were dialing for dollars. And I did lose 5 people. So, just like the other companies, we had to furlough people and lay people off. And, I lost five TEs during that time. And I haven't gotten them back yet. But we're even with less people, we're still able to do it. And that was much more work. So think about it. Whenever COVID hit, I have 5 less people and I have more work than I ever had. So it's like, we were dialing for dollars, trying to do whatever we had to do to support the company and to try, with the economic conditions that were going on, to try to make sure that we were doing the right things and that we were making our customers happy, but we're also holding our customers and our employees accountable for their work.
Great. Well, thank you so much, Lisa. And I think next time I'm not going to talk at all. I'm just going to let you go because you were a great example. No, I think it's because you're providing just great examples, practical application of exactly how a solution can help you, leveraging artificial intelligence and automation, regardless of what circumstances you're facing.
Right, and we're currently looking at the API. So we bought Salesforce last year, and now we're looking at the API, so we can communicate back and forth with Salesforce, because not everybody has a license for Get Paid. So, that way everybody in customer care, whoever's in Salesforce, has access to all of our data. So, and then they can, now you guys have also enhanced it, because we just went through a demo to communicate between Salesforce and Get Paid. So you can talk back and forth to each other. You can talk about disputes. We kind of had that set up, not through Salesforce, but we were doing it kind of a different way before Salesforce, but we were still communicating through Get Paid, where, we would send it straight out of Get Paid, and when they would send it back, it would come back in, depending on what customer we were talking about. So yeah, I think it's good.
Excellent. Well, I know we did have some questions come in, and Brian, I want to check with you from a timing standpoint. If we have time to address any questions, or if we just need to follow up individually after the fact to answer those.
I think there's a couple of good questions there, Keith, which I'm happy to extend on, and I'm sure the wider audiences, including the on-demand audience. So why don't you go ahead and answer those couple of questions that have come in, and let's see where we go from there.
Great. All right, so I'll take a look at some of the questions. So it looks like the first one is, you mentioned leveraging AI across an ecosystem. I know I use that term liberally here, of the financial system. So can you expand on what you mean by that? So sure, so from a financial ecosystem, the way I view it, and the way FIS views it, is really looking outside of just credit and collections, looking outside just receivables. It's looking at anything that's impacting really the financials or cash flow. So that's being able to connect and use AI across your receivables solution, your payment system, treasury, anything that really has an impact from a cash flow standpoint. It's being able to connect those things together. And in this instance, what I mean is being able to leverage the artificial intelligence that we're using within receivables to determine the risk of a customer, to determine the likelihood of delinquency with invoices, and being able to provide that data to a treasury system so that they know exactly what to expect from a cash flow standpoint, so that their calculations on working capital are that much more accurate, so they can determine whether they need to potentially look at extending some potential credit to help sustain the business over a certain period of time, or perhaps they can start paying down some of that credit as well. So it really just all depends on what information's there, and it's really about being able to leverage what AI is doing in this case, in the receivables world, across that entire ecosystem. So having all that interconnected. And so the next question is related to what is more predictive in the collections process? Is it internal payment history or external credit bureau data? And Lisa, I'll let you speak to that one a little bit from your perspective, and I'll add my 2 cents because I always do.
Right. So I think your internal data is more relevant. I've always looked at myself as that I can collect from anybody, so I may be able to collect something you can't. So, we have good relationships with our customers as well. So, but I definitely think internal information. I said earlier, our matrix is 40% of our internal information, and that's how long you've been a customer with Crowley. What are your sales with Crowley? Because we have levels, and then how have you paid Crowley? And so for existing customers, that's going to be 40%. And then for our foreign customers, it's going to be 100% in terms of what the scorecard is going to look at. We do look at the D&B information, especially for new customers, because that's all we have. But and we do use some of their metrics in there, but especially with COVID, we were definitely looking at the financial stress score because we wanted to see the likelihood of a customer going out of business. I found that the financial stress score has been very relevant, and so we were bringing that in to get paid, and so we did create we took some of the elements out during COVID because we wanted to know, are you delinquent with Crowley? So we took some of the elements out during COVID to make the scores go up to a higher risk account. So we could determine, how are you paying? Are you past due? So we were leveraging that highly on our own internal information. And that, like I said, sometimes the Dun & Bradstreet information, you're going to have limited data on there too. So you may have more experience. You may be a critical vendor, and that's where I was talking about we've gotten paid on so many bankruptcies because like the Sears, we were named a critical vendor in the Sears and we were able to collect our money. So it's like, I think it's very important that you have internal information and that you use it, because those signs, especially if they're going past due, are going to be there up front and you need to address them. One of the things that I will say is that sometimes you have some habits and behaviors within a company that you have to change with a customer, and that's when you do. So say I'm new to your company and you've got this customer that always pays in 90 days, but he doesn't have 90-day terms, he has 30-day terms, but he's always paid this way. A decision has to be made. I hold Crowley accountable just as much as I do the customer. So if I have a customer that's paying me in 90 days and he's paid that way for 3 years, well, Crowley, you need to give him 90 days or you need to work it back to 30 days. There's not like lifetime terms. So, so I think that your own internal information is more relevant, but we do use that external information as well, because there's times where they have information sooner than we do. And we get those alerts. So if there's a bankrupt or there's some kind of significant event, we get that alert right in the system and we're on it. And we're doing a review on it, and we're addressing it and trying to find out. We were doing that specifically with COVID because there was a lot of retailers, during COVID that we had to watch. I mean, we get a lot of apparel. We're in the apparel business, so we get a lot of clothes coming in. If the companies are closed down and they're not selling any clothes, so those are a lot of things that we were able to do through the system with our own internal information. But I wouldn't say that the third-party information is not relevant, because I think it is too. I think combined is a best practice.
So I said I was going to add my 2 cents, but I think we're in agreement there that internal payment history seems to be much more predictive of what's going to happen with your relationship with that customer. But certainly having external data is helpful as well. But it does seem that the internal payment history seems to be a bit more predictive. So a couple of last questions here, and I'm actually going to combine 2 of them together because they're somewhat related. And it's around, do the AI cash flow improvements, do the tools work with companies of different sizes? And the second question was around, how does the onboarding of AI work? Is it simply taking policy and applying those rules, or does it have this proof of concept of using example or using information when potentially this question says that there isn't a bad rate with the now available data? So I'll address those kind of together. The cash flow improvements provided by AI absolutely is available for companies of all sizes. So it doesn't matter if you're the small business with few transactions, or if you're all the way up to the full enterprise, large corporation. AI is using your internal history, your payment data. It's looking at your relationship with these customers to help with providing these risk assessments, the automation, the approvals, the automatic routing of information, all of that, and being able to assess the risk to help you prioritize your accounts regardless of your size. And then from the onboarding standpoint, I can speak to kind of what we go through in the process of developing the artificial intelligence for each client, and that's taking a look at your historical data, and we have you hold back certain information, of the most recent, 4 to 6 months worth of data, so that that can be used as validation. So we'll look at that historical data that you can provide, and we'll run it through our models, and we'll look to see where there's potential correlations for your business that may not apply to other businesses. And then that's where we'll provide predictions of where we see the risk associated with customers in the portfolio. And then we'll compare that to the information that you held back, the most recent information, so that you can get a good view of your standard process that you're using today versus what the AI prediction would have been for those customers, so that you can see where that was able to be identified, how it would have been reprioritized, and help you to focus your resources in the right place. And with that, I want to say a very big thank you to Lisa. Thank you for joining us, joining me on this webinar. Always lovely to talk to you. And I do want to say thank you to everyone who joined today. That I hope you got some information about how AI can really help you to improve cash flow, to really solve for cash flow. And if you do have any other questions, if there's any we didn't get to, or if you have follow-up questions, I believe we posted a way to connect with me through LinkedIn. You can always contact me. Be happy to answer any questions you have. Anything that I'm not smart enough to answer, I will certainly get you in touch with the right people. And
you'll send it to Lisa.
That's right. Yes, I will send them to Lisa. But again, thank you so much for joining us. And with that, I think we'll conclude the webinar.
Thank you guys so much. Have a great day.
Thanks, Lisa.
Thank you, guys. What a thoroughly engaging presentation. Lisa, you have a second career somewhere in entertainment, very big. And Keith, you're absolutely right. Lisa should start off the. Isabella,
you did a great job, though.
Fantastic. Keith, could I just ask you to stop sharing your presentation? That, ladies and gentlemen, ends the presentation today. As Keith has outlined, please do feel free to catch up with him, Lisa, Isabella, or anybody that Keith wants to put you in touch with on LinkedIn. And I hope that you enjoyed the Solving Cashflow in AR webinar as much as I did. And once again, a massive thank you to Lisa and Keith. Thank you very much for this. And just to let you know, the webinar will be available on demand over the next year. We'll be sending out an email with the information about that shortly. So once again, please do join us for the rest of the series. And thank you very much to FIS and the team for providing such useful insight to you all. Have a fantastic rest of week and fantastic weekend, guys. Farewell.
Thank you.
Thanks. Bye.
Bye-bye, everyone.